What's up, everybody? Welcome to the very first masterclass of day trading. I want to thank you all for signing up for this. Don't worry, I'm gonna edit this later to cut out the long wait at the beginning. I wanted to start it, get it going, and let you all join up as you wanted. Hopefully, you're all having a great day. And again, thank you for signing up for the masterclass. If you can, leave a comment real quickly to let me know that you guys can hear me all right. You guys can see everything all right before we begin. Can you guys hear me all right? What's going on, Lens? Just let me know if you guys can hear me all right. Just put yeah, you can hear me. Sounds good? All right. Let me switch this over real quick. And again, I will edit this to chop out all the beginning. Let me try to switch this display here. All right, so we can begin. Again, thank you guys for all signing up for the day trading masterclass. The purpose of this and what I want to do is I want to carry forward with this going into 2021. Every month, we're going to take it class by class, and I'm going to show you guys step by step the correct process to go about this if you want to be a day trader. If you're interested in day trading, you cannot rush the process. You have to accept the process, and you need to have a mentor to walk with you, guide you in the right path. I have over 400 videos on my YouTube channel, but they're scattered everywhere. So you don't really get an idea of exactly where to begin. The purpose of this masterclass and what I want to do is every class is going to build off of the last class, and they're going to tie all of my videos on my channel together. At the end of every class, you are going to have homework, just to give you guys a heads up. You don't have to do the homework, but I would recommend, if you want to take this seriously, just do everything that I say. If you do everything that I say and walk with me through this class, you will see improvements in your trading. You have to take this seriously. So by signing up for this, promise to yourself that you're going to take this seriously and you're going to go on with it full force, head on. You have to make sacrifices. You have to stay in over the weekend and study. You have to get on that grind. All right? So, Day Trading Masterclass, Part 1 Introduction. Hello, my name is David, but you can call me Mr. Wolf. I will be your teacher for this masterclass. And for you all private members, this is not going to be available to the public. This is only going to be for you guys only. So at the end of every single live stream that we do, I'm going to edit it and then put it in a playlist for you guys to either watch later, or if you've missed the class, you can go back and rewatch this, okay? Before we begin, at the time of this presentation, I have been a trader and a student of the markets for 5 years now. In this masterclass, this will give you the opportunity to learn from my experience, knowledge, and beliefs as a trader. This is a skill you will learn and have for the rest of your life. By signing up for this masterclass, you are telling me you want to take this seriously. I ask that I receive your full attention, listen to what I have to say, and do not question me. Please hold all questions till the end of the class. At the very end of my presentation, we'll go through a Q&A. You guys can ask me any questions that you have, and we'll make sure we'll take care of all the questions that you have. So if you have any questions, just write them down, and then we'll get to it at the end of the class, so we can quickly move along because we got a lot to cover and go through. All right, guys? And real quickly, if you have an urgent question, just leave a message in the members Discord and I could quickly see it and we'll be all set. You will receive homework at the end of each class, and I expect you all to do as I ask. I am here to help you and guide you in the right direction. Trust in the process. I'm going to show you guys the steps that I took, and now that I've got 5 years under my belt, I can look back and see what did I waste my time on, what were the right directions and turns that I've made, and that's what I want to try to help you guys in understanding this process. Do not come into this thinking you are going to get rich quick. Nobody ever has, and nobody ever will. There's a lot of people that always come into day trading and the stock market thinking they're going to make a quick buck. They're going to strike it rich. They play these really small cap, micro penny stocks, and they're just going to strike it big and rich. It's a lottery ticket. This takes skill. You have to work and condition yourself to be consistently good in this game. This is going to take time. I personally lost money consistently for 2.5 years before things started clicking. I always say this. People always think I exaggerate. I lost money for 2.5 years straight. I wanted to quit. Trust me. There were times I said, screw this. I had thoughts, will I ever learn this? But I kept going. I kept studying. I kept grinding. I showed up every single day, put that screen time in, and now I can look back and I could say, I'm proud that I've stuck with this because this is very rewarding once you learn this game, guys. You must put in the work, or actually, everybody learns at different paces. So some people may be able to pick up on this in a year, 2 years. Some people it takes 3 years, 4 years. Everybody learns at different paces. So again, don't rush the process. Take your time with this. Absorb it, okay? The stock market is not going anywhere. The stock market will always be here. Over the course, you must put in the work. I can give you all the information and tools, but you must do the work yourself. I cannot do it for you. That's going back to when I was saying we're going to have homework at the end of every class. I can give you guys the tools and the resources, but if you don't put that work in, you're only hurting yourself. There is no magic formula or secret that only day traders know to be profitable. It's a lot of hard work and grind. So I can lay everything out for you guys in neat, orderly fashion, but you have to put that work in. You have to. Over the course of your career, you will have ups and downs, especially in the beginning. Do not give up and do not quit. This is a hard game to learn, but it is very rewarding once things start clicking. You have to think, we're going up against some of the greatest minds in the world in the stock market. Computers and algos, they're only getting faster, stronger. So we have to adapt and move with that. What I like to keep in the back of my head is when I'm studying or if I'm ever not studying, I have in the back of my head that there is somebody out there that is putting in more work than me. They're studying more than me. They're on that work grind more than me. That's what keeps me going to stay ahead and with the game in the market. And you also have to adapt. You have to learn about yourself. Trust me, as you progress in the stock market as a trader, you're going to learn a lot about yourself. You're going to learn about your emotions. You're going to learn about greed, fear, FOMO. You're going to learn about all that stuff. You're going to learn stuff about you that you've never even thought about or even considered. Trust me. You want to be very thoughtful and observe your thoughts, observe yourself all the time, especially when you're in the stock market. Always be observing your thoughts and monitoring your thoughts. You will get aggravated and feel like you will never learn this. You want to embrace your mistakes and errors, learn from them, and continue to improve every day. This course is designed to build off each lesson. We are going to cover everything from getting started as a beginner, what you will need, key subjects to focus on, and learn to start a foundation, order types, trading strategies, psychology, emotions, and more. We're going to cover everything, guys, over the course of this entire masterclass. So don't worry, I'm going to get to specific subjects over time. We're going to take this step by step. All right? You know what, guys? I didn't know that you guys couldn't see my monitor. I'm totally sorry about that. I'm over here trying to use PowerPoint. That's why I kept looking at my phone. My screen keeps going black. There we go. I'm sorry about that, guys. I really did not know. I thought that it was up big for you guys. You guys could see it. All this stuff. But this is how we'll do it right here. All right, let's begin. Now that we got all the introduction out of the way, what you guys can expect, for this, let's jump into it. Requirements for day trading. All you need is a computer, internet, a brokerage account, and money. Brokers will provide a charting platform that you can download to your desktop or laptop. Some popular retail brokers: TD Ameritrade, Charles Schwab, E-Trade, TradeStation, Interactive Brokers, Centerpoint Securities, Fidelity, Mobile Brokers, Robinhood, Webull. Back then, when I first started trading, we had commissions. I was paying $5 to $7 per trade. So now the ballpark is in your hands. We have free commissions. We don't have to pay platform fees. It's free to trade now. We're entering into a new world of trading. Now I'm seeing brokers start to come out with fractional shares. So you can, if you have $1,000 and you can't afford to buy one share of, let's say, Tesla or a few shares, you could put up your $1,000 towards Tesla and buy fractional shares and trade like that. You know, the markets are always evolving, always. Every broker is going to have pros and cons. So please investigate each broker, see what they are good at, not good at, and select the best broker that fits your needs. A broker or a website that I really like, and I'm going to share it with you guys, is called Investimonials. I'm going to share this website in the members chat for you guys. What I like about this website is they have reviews on all different types of things, from brokers, websites, books, newsletters, trading DVDs, software, all kinds of stuff. This website is owned by Timothy Sykes. I've known about this website for a long, long time. Check this website out. It's really, really good and finding great stuff also. But when choosing a broker, always look into the brokers. Look at the reviews. What are they good at? What are they not good at? If you're a type of trader, you like to short small cap stocks, you gotta look for that broker that everybody else, this leaving good reviews about shorting small cap stocks. I think Cobra Trading is like the #1 broker right now for shorting stocks, but every year it changes. 3 years ago it was E-Trade. Then 2 years ago it was TD Ameritrade, always had shorts. So broker to broker, every year it always changes for shorts. PDT rule, pattern day trader. What is pattern day trader, PDT? A pattern day trader, PDT, is a regulatory designation for those traders or investors that execute 4 or more day trades over the span of 5 business days using a margin account. You see how I underlined margin account there? The number of day trades must constitute more than 6% of the margin account's total trade activity during that 5-day window. If this occurs, the trader's account will be flagged as a PDT by their broker. The PDT designation places certain restrictions on further trading. This designation is put in place to discourage investors from trading excessively. Most brokers will give you a warning, but after that, they will lock up your funds for 90 days. So if you have an account under $25,000 and it's a margin account, you are placed under PDT. you're only allowed 3 day trades per 5 business days. I know it's a stupid rule. It's very, very stupid. I hate PDT, but in a way, PDT helps newer traders from over trading, using too much leverage because you have a margin. You could really blow up and really go in debt if you don't know what you're doing. So PDT, has you under that restriction to help you until you're able to understand how this all works, how stocks like to move, and so forth. Pattern day traders are required to hold $25,000 in their margin accounts. If the account drops below $25,000, they will be prohibited from making any further day trades until the balance is brought back up. There are ways around the PDT rule. Examples of PDT rule. So we're going to go over some examples of what will trigger you as a PDT, pattern day trader, if your account is under $25,000. So, one pattern day trade is to buy and sell a security in the same business day. That's one day trade. You can buy a security, you can buy one time 1,000 shares and sell in separate blocks. So if you buy 1,000 shares and then sell 250, sell 250, sell 250, sell 250, sell in blocks, that is still counted as one day trade. If you have 2 separate buys of the same security and 1 sell, that is still one day trade. If you buy 500 shares and then buy another 500 shares, which brings you up to 1,000 shares, and you sell that 1,000 shares in one lot, that's still only one day trade. Now, if you buy more than 2 separate times and sell 2 or more separate times, that counts as multiple day trades. So if you buy 500 shares and then buy another 500 shares and then sell 500 shares and then sell your last 500 shares, that's 2 day trades. So, and then I just explained that. Other ways around the PDT rule. If you guys have any other questions about PDT, just write down a little note next to you, and then at the end, we'll go over that question. I'll be sure to answer all of your guys' questions at the very end. Other ways around PDT rule. You can have multiple brokers open and funded. So for an example, if you only have $6,000, you can open 3 separate brokerage accounts and fund them with $2,000 each, and you will have a total of 9 day trades per week. All right? Swing trading. If you hold a position overnight and sell the next day after the market opens, you will not have a strike towards you for PDT. Some people look at this as an excuse to hold a position overnight just so they don't use a day trade. This can be a disaster, especially if you are trading small cap stocks. These people with small accounts, they buy a stock at the end of the day. They're all out of day trades. They've used their 3 day trades. They don't want to get flagged by their broker. So they'll hold the stock overnight, hoping that the stock gaps up, or they'll hold it overnight and wanting to sell it the next day just so they can get around the PDT rule, don't do stupid things like that. You got to think. You want to do this professionally? Think like a professional. Treat your account like your business. The thing that I like to tell people when they're first starting out and they have their own account, give your account a name. It's your business. So I have my trading account. My trading account, I call it TradingLearning101 for an example. That is my business. And my responsibility is to protect that account with risk management, not be stupid and take stupid trades. Everything that I do, I have to ask myself, how am I putting my business at risk? If a stock's a big runner for the day and I'm not reading SEC filings before I swing this overnight, I'm putting my business at risk because I don't know what to expect the next day. And then I wake up, the company does an offering or exercises warrants, and the stock price drops 50%. I call that a 50% haircut. It's not worth it. So treat your account like it's a business. Think logically and always ask yourself before everything that you do, how am I putting my business at risk? What's the reward? What's the potential risk? More ways around PDT rule. Offshore broker. I do not recommend opening an offshore broker. This is an option you have if you wanted, and I am only sharing this information with you. Opening an offshore broker is attractive to newer traders looking to get around the PDT rule in the United States. Opening an offshore broker has risk. They can close and they could take your money. But I do know of some traders that use an offshore broker to get around the PDT rule. Remember, the PDT rule is only in effect for the United States. Opening an offshore broker, you will pay more in fees and commissions. But this is the cost if you want to trade as much as you want. If you don't have $25,000 or more for an account to trade. If you do decide to go this route, please do your own CME, Capital Markets Elite Group. Trade Zero, F1 Trade. Recently, about a year ago, another popular one was SureTrader. There were a lot of people that used that, but they closed up. They shut the doors down. So if you had an account with SureTrader, they did announce that they were closing up shop. But just imagine if you never got the notice and before you know it, they shut down and they took your money. There's nothing you could do about it. So please do your own research, guys. Always look into things. Always. The stock market and Wall Street is a big business. Cash account. If you have a cash account, you do not need to worry about the PDT rule. You can buy and sell as much as you want. You do have to wait for funds to settle though. They call it the T+2 rule. T+2 means you have to wait 2 business days for funds to settle to trade with those funds again. You do not receive margin with a cash account. So if you have a margin account and you have $2,000, most brokers give you 3 to 4 leverage on your $2,000. So if you have 2,000 and you have a margin, then you have $8,000 in buying power. With a cash account, you do not get no leverage or margin. It's just a cash account. You trade with the cash that you currently have. You can only buy stocks. You cannot short stocks with a cash account, okay? When I was starting out as a trader, it used to be T3. They recently just lowered it like a year and a half ago. So a cash account example, if you have $5,000 to trade with and you only use half of it, $2,500 for that day to trade with, you can buy and sell as much as you want only using that $2,500. The next trading day, you still have half of your account left, $2,500 of your 5,000. You must wait until the next trading day to get back your other $2,500 to trade with. That's the T+2 rule. Okay? So, cash account, you have $2,500. Let's say there's a stock that's $1 and you buy 1,000 shares of it. You could buy 1,000 shares, sell 1,000 shares, and then you could buy another 1,000 shares and then sell another 1,000 shares and then buy 500 shares, sell 500 shares. That's 3 day trades with that cash account, but you're not under PDT rule because it's your own cash. But you did use $2,500 of that cash account. So now you have to wait 2 days for those funds to settle before you can use that money again. Okay? Ticker symbols. What is a ticker symbol? A ticker symbol is an arrangement of characters, usually letters, representing securities listed on an exchange or otherwise traded publicly. When a company issues securities to the public marketplace, it selects an available ticker symbol for its securities that investors and traders use to transact orders. Every listed security has a unique ticker symbol, facilitating the vast array of trade orders that flow through the financial markets every day. So, for an example, Facebook is FB, abbreviated for Facebook. That's the ticker symbol. Tesla is TSLA. History of the ticker symbols in the US. Standard & Poor's S&P developed the modern letter-only ticker symbols in the US to standardize investing. Previously, a single company could have numerous ticker symbols amongst different individual stock markets. The term ticker refers to the noise made by the ticker tape machines, which were once widespread in use, but now have largely been replaced by various types of electronic digital tickers. Each stock market has a formatting convention for the issuance of tickers specific to that stock market. And just to show you guys an example of just some history of the stock market. This is what they used to use back in the day. They called this the ticker tape. They didn't have computers and all that electrical stuff that we have now. So if you were rich, you had one of these in your home connected to a landline, and it would print out what the exchanges, the stock did for that day. It would show you the price, how much it was up or down, and the current volume on the day. That's what they used to do. They didn't even have charts really back in the day. So was a big thing back in the day. I just think it's fun to know about stock market history, how they used to do things, and how far we've advanced and continue to advance in the stock market. Ticker symbol basics. Stock or equity symbols are the most known type of ticker symbol. Stocks listed and traded on the U.S. exchanges, such as the New York Stock Exchange, NYSE, have ticker symbols with up to 3 letters. And this is important stuff to remember right here, guys. So, stocks listed on the New York Stock Exchange have 3 or less letters in their ticker. This is how you can quickly identify if it's listed on the New York Stock Exchange or the NASDAQ. NASDAQ listed stocks have 4-letter ticker symbols. The ticker symbol provides a unique identifier by which individual securities can be researched and traded. While the ticker symbol is most commonly an abbreviation of the associated company's name, it is not a requirement. Availability may prevent a company from selecting a symbol that easily translates to its name. So that's why sometimes you'll see stocks and then you'll see the ticker and it just doesn't even make sense. It doesn't abbreviate the company. It's probably because in the past somebody already used that ticker symbol, so they had to get creative and come up, with something else. Ticker symbols followed by E or LF. When a ticker symbol contains the letter E on the NASDAQ stock market or an LF on the NYSE, this indicates that the company associated with the stock has fallen behind on its reporting obligations to the Securities and Exchange Commission, SEC. The associated letters add to the end of the company's normal ticker symbol. Often companies have a set grace period to complete their reporting requirements. Once the requirements is met, the extra letters are removed. If the reporting requirement is not met before the end of the grace period, the security may be removed from trading or delisted. A Q at the end of a stock symbol means the company that issues the stock is in process of bankruptcy. So I bet a few of you guys in here didn't know those letters at the end of the tickers has meaning. So if you see a Q at the end of a ticker symbol, that company is in the process of bankruptcy. E or LF, these are listed stocks on the exchange. They have to, by law, report earnings and all of that stuff quarterly to the SEC. If it's a public traded company, they have to do that. In OTC land, over the counter stocks or pink sheet stocks, they don't really have to do that. That's more of the Wild West. They can get away with a lot more stuff. But once you get promoted to the big boys, the New York Stock Exchange, NASDAQ, American Stock Exchange, they have requirements to stay on those exchanges. And if you don't meet those requirements, back down you go. You'll see a lot of times with stocks, they'll have warnings by the SEC, or if their stock falls below $1 and they're listed on the NASDAQ, if they stay under $1 for 90 days, the SEC will say, hey, if you don't get that stock price back above $1 in 90 days or 30 days, then we're going to delist you. You're going to go back on the OTC market. So that's when you'll see these companies get in desperation mode, and then they'll put out a lot of fluff press releases to hype up their stock to get it to where it needs to be. Makes sense? There's a lot of games played in the stock market. A lot. All right, next, candlestick charts. And this is going to be your homework. We are not going to get into detail about candlestick charts. New people, this is going to be your homework. Remember, I can give you the tools and guide you, but you must put the work in. On my YouTube page, TradingLearning101, I have a Japanese candlestick playlist with a total of 9 videos I want you to watch. You have 1 month until the next class to watch 9 videos. That is almost 4 hours of additional lessons. These videos will help you understand the different types of candlesticks, candlestick patterns, candlestick charts. Learning how to read and understand candlesticks is very important because with candlesticks, you can see the emotions of other traders and how the stock is trading. I can't tell you how many hints candlesticks reveal when I am trading a stock. Pay attention to details. So if we pull up, and this is going to be your guys' homework. And again, if you want to take this seriously, you have to put this work in. Go to my playlist section. Right down here, Japanese candlesticks. View full playlist. I have a total of 9 videos in this playlist related to candlesticks, candlestick patterns, candlestick charts, formations, all that good stuff. I have a candlestick chart patterns webinar that's over an hour and a half long. I put a lot of time into these videos, and like I said earlier, with this masterclass, this is going to tie together all of my videos, 400 videos, into a process, okay? So you have 1 month for the next class to watch all of these videos, take notes, study candlesticks, study candlestick charts, candlestick patterns, and a few books. If you want to get into books on candlesticks, I highly recommend Steve Neeson. Steve Neeson is the candlestick guru, as I would like to say. He is the candlestick guy. He brought candlesticks to the Western world. He made it popular. Yeah, candlesticks have been around since early rice trading days, but that was only popular in Japan. He brought it over to the United States and made it popular in the 90s. So candlesticks have not been around long in the United States. And you just get to see so much emotion in what's going on with candlesticks. I'm telling you guys, there's so much detail in candlesticks. You can really see the emotion in the candlesticks. You really can. But his first book, Japanese Candlestick Charting Techniques. I love this book. This is my favorite candlestick book by this man. And then his second book, Advanced Beyond Candlesticks. That's another great book right there. and then some websites to get you guys going for candlesticks if you want to look more into it. Let's see. Who's that other guy? He's a bigger guy. I'll think of his name later. But go through, watch these candlestick videos. I'm telling you guys, these will really help you. When I first started learning and trading, learning about candlesticks is a great area to start learning. This is where I first started on my journey, and I want to lay out my path for you all to follow. I was eager and excited to learn. I went out and got flashcards of candlesticks, and while I was on lunch at work, I would blow through the flashcards so they would stick in my head. I would also do this before bed. I was determined and had a feeling inside I'd never felt before. I enjoyed learning and studying about the stock market and day trading so much. If you are in this just for the money, you will have a hard time learning and wanting to put in the work to get better. If you just have I got to make money, I want to make money on your mind, you're going to really have a hard time. You have to really enjoy this. You have to have a passion for this if you want to have a chance at succeeding in the stock market as a day trader. To me, this is not just a job. This is a passion. I love doing this. And it's the passion of trading and searching for that great trade. You honestly must have a passion for this and willingly sit for hours studying, looking at charts, learning from mistakes, and adapting as a trader. To me, this is not work. This is a passion for trading. So if you are looking to make easy money or fast cash as a new trader and think you will just walk in, learn in a few months to 1 year, good luck. You are going up against some of the smartest people in the world and computers that are only getting better and faster. You cannot rush this. Accept the journey and process of becoming a consistent and profitable trader. Hard work, sacrifice, dedication will pay off down the road. It did for me. Don't quit. And that's the end of class 1, guys. You got your homework. We got the introduction. We're going to take this step by step, like I've said. Now, if you guys have any question that you guys took in throughout this, let's get through them and answer them for you guys. I hope you guys enjoyed that presentation. I put that together over the weekend. Now, over the course of this next month before our next class, it gives me more time to focus and put together part 2 of class. And as we go along, guys, every class is going to get more detailed. We're going to get into more subjects. We're going to take this slow, okay? I'm going to show you guys everything that I learned and that I know, okay? Don't rush this process. The other candlestick guru is Stephen Bigelow. So Steve Neeson and Stephen Bigelow. Follow both of these guys on Twitter and check out their books and check out their videos on YouTube, okay? Candlesticks is really a great place for starting out as a trader. Learning about the candlesticks, because how are you going to interpret and read a chart if you don't even know what you're looking at? So, learning about the candlesticks, how they formed, the emotions, the different kinds, will really help with you guys. I'm telling you. This book right here, Candlestick Profits, Eliminating Emotions, is a really great book also. I own this book. I've read this book. It's amazing. It's great. Stephen Bigelow and Steve Neeson are the guys. So, again, if you guys have any questions, leave them down in the comments here on the video right now. We'll answer them for you. Or in the Discord, you can leave your questions and we'll get those answered for you guys. If not, then we'll end the first class here. Again, I want to thank you guys for signing up for this. I really think you guys will enjoy this as it progresses. I plan on, this is going to be 2021 for me. Every month, we're going to be putting out a new class and a new master class, tying all the YouTube videos together. And again, if you guys want to go back and rewatch this, I will edit it. I'm going to repost it up, and it's going to be for you members only. Okay? And then if you haven't already, sign up to the Discord, message me with your YouTube username, and I'll give you guys full access to the Discord, okay? For signing up for the class, you automatically get 100% access to the Discord. All right, I'm not seeing any questions, so that's good. Hopefully you guys all enjoyed the presentation. Give you guys just a couple seconds to, if you have any questions about today's courses. You guys know the homework, what to do. Head on over to the YouTube channel, to the playlist section, go to the candlestick, Japanese candlesticks, and your homework is to watch all of these videos and take notes. I've put a lot of work into these videos, guys. I'm gonna lay it all out for you guys, how to go about day trading. All right, I'm not seeing any questions, so must have been pretty good. I want to thank you guys for coming for today's first class. Have a happy Thanksgiving. Thanksgiving is this Thursday, and the next class is going to be just before Christmas. So I will alert you guys when the next class will be. I'm going to probably say the second week of December is when we'll do the second class. Because I know everybody's going to be doing the holidays and whatnot. So, all right. That's the end of the first boot camp masterclass. I hope you guys enjoyed it. Again, if you guys have any questions on anything I've covered, leave a comment down below. Feel free to message me. I'm more than happy to answer your guys' questions. That's going to wrap it up for this one, guys. This video will be on demand for you all to rewatch again. You know your homework? All right, now we got a couple questions. So, Len says, good, enjoy your week. You have a good week also. Happy Thanksgiving. And Raul Alcron asked, what are your favorite candlesticks to watch? I don't have a specific candlesticks to watch. It's just when you're watching the chart as a trader, knowing what to look out for. If I see a long bottom wick on a candlestick, there's a buyer down there. If I see a long upper wick, there's a seller up there. And just candlestick formations and, the morning star, a doji. A doji on a daily chart could mean a trend reversal. A 15-minute chart, it could be a trend reversal. I explain it in all of these videos, guys. So you just have to put that work in and watch all of these. That's 4 hours of candlestick lessons for you guys on candlesticks. When I first started out, I obsessed over candlesticks. Like I said, I got flashcards. I'd read all these books. I was excited to learn this stuff. Watching YouTube videos. Joe D has a question. What's your question, Joe D? But of course, if I was to pick one candlestick that's my favorite, I mean, we all love those big green candlesticks. I mean, come on. That's money. And then they have Mazabu candlesticks where it's one big green candle and one big red candle. Usually, which means there's a big like event or news event. So Joe D asks, is there a minimum amount to open a margin account? That's a good question. Normally, with most brokers, the minimum to open a margin account is at least $2,000. You need at least that to open a margin account. But it's been so long for me since I first opened up a small account or a margin account to get started. Back when I first started, you had to have $2,000 to get approved for margin trading. And that was with TD Ameritrade and Thinkorswim. I'm not under a PDT anymore. I have a big boy account I trade now that's over $100,000. So I don't know the minimum today. But if you guys have any more questions, leave them down below. And hopefully I was able to answer that for you. Joe D. Robinhood may, give you margin with less than 1,000. I'm not sure, but I wouldn't recommend trading with Robinhood. Robinhood is it's good to get started, but other than that, it's not good. PRD66 says we had to get the foundation laid. Yup. Because everybody's at different levels. You got some people that are literally just starting out, some people that's been around for a few months, someone that's been here over a year. I want to make sure I satisfy everybody and cover everything. So we're just going to start from the beginning and slowly work our way through. Don't worry, guys. We'll get to the trading psychology, emotions, trading strategies. I myself, I like to think my expertise is in psychology and emotions. That's where I really thrive at. So Ray asks, what type of orders do you use when trading? I'll use market orders. I'll use limit orders. I don't really ever use stop market orders or anything. I never really use stops because I like to give a stock room to move. And market makers love taking people out and then ripping it back up. I'll use a mental stop. I'll just mark it out and get out of a position if it's not working out. But if I'm looking to take profit, I always try to take the ask or I'll put a limit. I think with Charles Schwab, it's at least $2,000 to have a margin account with Charles Schwab. Same thing probably with TD Ameritrade as well. At least 2,000 to open a margin. James Lindsay says, I use TradeZero based in the Bahamas as I live in the UK. I have read that they can be trusted. Now, not so sure, ha. I've heard of people using TradeZero. You know, I forgot to put that in my presentation, but I've heard of TradeZero. I've heard a lot of people go with CMEG, Capital Markets Elite Group, also. But the thing with those offshore brokers, you're still going to pay platform fees and you're still going to pay commissions. You're going to pay ECN fees. So you got to be careful on how much you trade because that can really eat into your profits. Ray asks, how much time do you put into one stock research before you decide to enter a trade? Not really too much. I mean, I look at the basics, the float, you know, I'll look at uh I'll pull up Flash SEC real quick. You know, let's say I want to look up DPW and I'll pull up this to see if there's any warrants or offerings, you know, anything like that, cuz I don't want to be buying into big sellers or an offering. You know, I want to protect my butt. But I'll look to see what the float is. I really don't do too much research. I mean, if the stock's in play, it's in play. I play it. We'll get more into detail of that, though, down the road. There's a step process to it. Tub asks, do I prefer beach or mountain views? Mountain views for sure. I'm not much of a water guy. This background changes every day. So, being funny there, Dub. James Lindsay, it might be for another class, but you talk a lot about volume retracement. I am interested in that and how you use that when trading. We'll get into more of that in the master class if you want to wait around for it, or if you want one-on-one personal tutoring, I offer that. Just send me a private message in the Discord and I'll give you all the information if you want one-on-one tutoring. You can ask questions here on YouTube or in the Discord right here. I'm trying to look at both and answer them both for you guys. I already traded this morning. I traded CIIC right here, guys. I traded CIIC. I made $6,000 today. And you guys see every day in chat, I post what I make. So I show you guys every day that I consistently pull money out of the market. It can be done. I've been doing this for 5 years. You just got to put that work in. Or you guys didn't even get to see it. There you go. This is a trade here I took on CIIC. You know, I seen that it was curving up, rounding at this bottom 29. Rounding bottoms are bullish. You know, that was a fake breakdown right there when this poked back up and started to gear up to break over that VWAP. I entered in for that big surge up to 3150. Okay, so we got, yeah, so James Lindsay, if you're interested, just send me a message and maybe we'll look into private tutoring for your volume. Joe D asks, but I have already learned so much just in the Discord and the free YouTube Trading Learning 101 channel. Looking forward to review and cement those foundation blocks. Awesome. That's good to hear, Joe D. I have that passion. I have to pull myself away from those trainings on YouTube. Not sure what you're trying to say right there. Just what I can really recommend for you guys, don't ever compare yourself to anybody else. Only worry about yourself. Don't look at what other people are doing. Never compare yourself to another trader. Only focus on yourself. That really pays off down the road. You know, you got to look at this and take it in levels. You really do. Think of it as playing a video game. Lens Lou asks, what else do I trade? I trade small cap stocks, stocks between $2 and $100. Sometimes I'll trade large caps if they're in play. I'll trade ETFs like the UVXY if the market's crashing and the VIX pops and gets very volatile. Um, I don't really trade too much oil or gas or gold. I just stick to the market ETFs. It used to be the TVIX, but they retired it. Now they have the UVXY, the VIX, VXX. I'll trade those if the market, starts to panic and crash. It's good opportunities. And my 5 years in, I'm just now learning how to trade options. So I've waited till I was actually able to consistently make money with stocks. Now I can dabble off and learn about something else as another vehicle to make money. I've tried learning options many times and it's just so complicated. And you just got to stick with it for it to start sticking in your head. Jody says, I spend a lot of time watching. Keep watching, study, and then one day, everything's just going to click. And you're going to be like, that makes sense. That makes sense with that. Okay, now I see why that is working with that. You really want to absorb as much as you can in the beginning. And then down the road, everything starts coming together. But, you have all these people out here teaching and they don't know what they're talking about. It can really lead to bad practices, guys. I'm telling you. You got to be careful who you learn from. Just as a heads up, if you're having trouble with the Greeks and you're a member of the chat, I just created an options education section right here. As I'm going along learning, I'm posting what I'm learning, and I also posted this cheat sheet for the Greeks. So you could, glance at it and maybe it could help stick in your head on the meanings of them and stuff. That's good to hear, James Lindsay. That's awesome. A lot of patience. That's what I say at the end of every single one of my videos. Have that patience, have that discipline. But all right, guys, I think that's going to about wrap it up. I hope you guys enjoyed this. I hope you're looking forward to class number 2. I'm going to go back and re-edit this, put it back up for you guys if you want to rewatch it or if you missed today's session. I will be in the Discord if you guys have any more questions. As I always say, guys, have that patience, have that discipline, and study, study, study. Let's get it, guys. I don't know, real quick, the markets will be open Black Friday. So tune in Friday. We'll do the live stream trading. We'll keep the streak alive. 4 straight weeks of pulling money out of the market on the live stream. Since I've been doing it, so far so good. All right, guys. Be safe out there. Study up. You guys know your homework. Do your homework. It's in your hands. Get to work. Later, guys.